Hi friends, I hope so you all are fine. Welcome to my new video. In this video we will discuss about how do credit card work. So come to my Google screen and see here how do credit cards work. When you need to make a purchase or pay a bill, credit card can offer both and the potential to save money if you are earning back some of what you spend in reward. At the same time, you can also use credit card to build credit history through healthy financial habits. While credit card or debit card may look similar, they work very different. If you are new to using credit, there are a few important credit card facts to know. Key takeaway: credit card have a credit limit you can make purchase against, then repay at the later date. Carrying a balance on a credit card can trigger interest charges. It's important to read the fine print closely on credit card promotional offers. Some credit cards allow you to earn reward on purchases in the form of point, miles, or cash back. What is a credit card? A credit card is a physical card that can be used to make purchases, pay bill, or depending on the card, withdraw cash. The simplest way to think of the credit card is a type of short-term loan. When you open a credit card account, you create card company give you a set credit limit. This is essentially an amount of money that credit card company allow you to use the make purchases or pay bills. Your available credit is reduced as you charge thing to the card. You then pay back what you spent from your credit limit to the credit card company. Important note: credit card can be secured or unsecured. A secured credit card requires a cash deposit to open, which typically double as your credit limit. How credit card work? Credit card can be used to make purchases online or in store and pay bills. When you used a credit card or either one, your card details are sent to the merchant's bank. The bank then get authorization from the credit card network to process the transaction. Your card issued then to verify your information and either approve or decline the transaction. If the transaction is approved, the payment is made to the merchant and your card available credit is reduced by the transaction amount. At the end of your billing cycle, your card issue will send you a statement showing all the transaction for that month, your previous balance and new balance, your minimum payment due and your due date. The grace period is the period of time between the date of a purchase is on your card and the due date listed on your statement. During the period, if you pay your bill in full by the due date, no interest charge. But if you're carrying a balance month to month, your credit issue can charge your interest. Your credit card annual percentage rate reflect the cost of carrying a balance. Your ARP includes both your interest rate and other costs such as annual fee if your card has one. Most credit cards have a variable that try to a prime rate. This means your card AR can change over time. Through the Act of 2009 sets strike guidelines on which credit card companies can and can't raise your rate. Credit card difference between debit card. A credit card and debit card may seem like the same thing, but they are not. When you make purchases with the credit card, you are not accurately spending any of your own money at the moment. Instead, you are spending the credit card company money which you have to pay back, potentially with interest. Debit card, on the other hand, are linked to your checking accounts. they are not exactly the same as the prepaid card. When you make the purchase with your debit card, the money is automatically deducted from your bank account as soon as the transaction is processed. There is nothing to pay back later since the money has already been taken from your account. Debit and credit card are also differ in terms of their credit score impact. Using a debit card has not impact on your credit score because your bank account activity is not reported to the credit bureaus. Credit card, on the other hand, can import your credit score directly. For instant calculation, your score based on payment history, credit usage, credit age, credit mix, inquiries for new credit. Making credit card payment no time can help you score, while paying late could hurt it. Similarly, keeping a low balance compared to your credit limit can have a positive impact, while mixing out your credit limit can from your source. Another key difference between credit and debit card lies in fraud protection. Federal law offer more fraud protection for credit card than debit card. This chart highlights your unauthorized transaction with credit and debit card. You can see the chart. Next, we discuss about how to compare credit card. If you are in the market for your first credit card on your next credit card, it's important to do some shopping. Some of the key things to look for when comparing credit card includes regular variables, APR of balance transfer and cash advance, promotional terms and conditions, annual fees, reward programs, introductory bonus offer term. It's also helpful to the card others benefit and features if any. From example, if you are interested in opening a travel credit card to earn miles or points toward flight and hotel stay, you may also be interested in finding a card that comes with benefits such as airport access or airline fees credit. If a credit has an annual fee, it's helpful to compare the value of reward and benefits to the fee to decide it is the worth it. Next, we discuss about what are the main difference between credit and debit card. You are essentially borrowing money to make purchases. When you use a credit card, any balance not paid back during the billing month, interest that must be paid. Debit card are linked to the bank. When you make the purchase with your debit card, the money is automatically deducted from your bank account as soon as the transaction is processed. If you like our video, please subscribe our channel. Thank you so much.